EV companies have been some of the best performing equities in the market this year in 2021, despite the fact that the industry has had a rather flat year. The most successful electric vehicle stocks have been those of upstart electric vehicle leaders. Some traditional automakers, on the other hand, have performed well as a result of significant investments in electric and autonomous vehicle technologies. Automobile stocks that have lagged in the transition to the next phase of the industry have also lagged in the market, making stock selection crucial for car investors in general. In today's video, we'll go over the fundamentals of options trading as well as the odd activity that has occurred in Lucid's options market. Is the ship heading in the right direction? Is it more bullish or bearish? Stay tuned for that. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. Before we get into what happens to the Lucid stocks options and whether they're good or terrible, first and foremost, we must comprehend the fundamentals of the options and exactly what they are. Therefore, allow me to begin by briefly introducing you to the options themselves. What is an option? Options are financial products that are derivatives of the value of underlying securities, such as stocks, and are based on the value of such equities. An options contract provides the buyer with the option to purchase or sell the underlying asset, depending on the type of contract they have and the terms of the deal. In contrast to futures, the holder is not obligated to acquire or sell the asset if they do not like to do so. Optional contracts that allow the holder to purchase an asset at a specified price within a specified term are known as call options, whereas option contracts known as put options allow the holder to sell an asset at a specified price within a specified duration. Each option contract will have an expiration date by which the holder of the option must exercise their right to purchase the underlying asset. The strike price of an option is the price at which the option is exercised. In most cases, options are purchased and sold through online or retail brokerages. Options are a financial product that can be used in a variety of situations. These contracts are between a buyer and a seller, with the buyer paying an options premium in exchange for the rights granted under the agreement. Similarly, call options have a bullish buyer and a bearish seller for every contract, but put options have a bearish buyer and a bullish seller for every put option. Options contracts typically represent a determined number of shares of the underlying security, and the buyer will be required to pay a premium fee in exchange for each contract. The premium is based in part on the strike price, which is the price at which the security can be purchased or sold until the expiration date. The expiration date is another aspect that influences the premium pricing. LCID options, unusual activity. There has been an extraordinary amount of activity in the LCID stock options market. Bullish LCID call option contracts are those that are purchased at or above the market's asking price, while bearish LCID put option contracts are those that are sold at or below the market's bid price, both anticipating an increase in the value of the underlying asset. When it comes to bearish trades, the converse is true. Put options purchased at or above the ask price, or call options sold at or below the bid price, both of which are expecting a move to the downside. Options are purchased and sold by traders and investors for a variety of reasons. Options speculation enables a trader to take a leveraged position in an asset at a cheaper cost than it would be to purchase shares of the asset directly from the market. In order to hedge or lower the risk exposure of their portfolio, investors will employ options to do so. Jon Najarian views in on the various LCID options. In addition to being a professional investor and market analyst, Jon also runs Investitute.com, which provides financial education and newsletter services. He has written 4 best-selling books on trading and options throughout the course of his career. Daily options trading insights from Jon and Pete Najarian and the Market Rebellion crew are provided on Market Rebellion, a daily options trading and insights channel. They discuss the day's stock market as seen through the prism of unusual options activity and technical analysis in which they specialize. Jon covered the Lucid stock option, upside calling the LCID option, which was barely out of the money on August 27, 2021. He discusses LCID options in the following video clip, which you can watch.
Let's dive into today's 3 at 3 with Lucid. LCID. You guys know what they do? They make a car that's pretty darn nice, looks an awful lot like an EV should look, and Lucid 2227, less than half the price, in fact closer to a third of the price of the high that it hit back in February, but nonetheless upside call buying weekly, 8,900 of the this week expiration 23 calls. So just out of the money. You know the drill. I buy the at the money, sell the out of the money. You decide how to play it on your side, folks, but always be aware this is the deep end of the pool. There are a lot of things that can work in your favor and things that can work against you, and it's all on a very short timeline. So be aware whenever you're trading options that are as little as 3 days until expiration. There is the stock moving up a little bit to 22.73 just a bit ago.
During his appearance on Options Action, Jon Najarian discussed Lucid Group's extraordinarily high options activity. Options traders, according to him, are purchasing the August $23 calls in the name. He purchased the August $22 calls and hopes to profit from a rally in the stock by selling upside calls against the positions he's taken. Call options for September 3, 2021 are now trading at a strike price of $15 with a premium ask price of $5.70 and a bid price of $5.60. In comparison to the put position of the LCID option, which has the same strike price of $15 but has a premium ask bid on the option of only 0.03 and 0.02 respectively. If there is one thing the option market demonstrates about Lucid, it is that call options carry a higher premium than put options and that traders are quite positive on the LCID options. This is a positive indication for Lucid Motors since it indicates that investors will be jumping on board the bullish train very soon. The conclusion. Because the values of options can be mathematically described using a model such as the Black-Scholes model, many of the risks associated with options can also be quantitatively analyzed and comprehended. Due to this unique characteristic of options, they are considered to be potentially less dangerous than other asset classes, or at the very least, allow the risk associated with options to be better recognized and evaluated. It is possible to limit risk in certain situations by utilizing several options. It all depends on how you intend to employ them. Options can be less dangerous for investors since they demand less financial commitment than shares, and they can also be less risky because they are relatively immune to the potentially catastrophic impacts of gap openings, which can occur when a market gap opens. Options are the most stable kind of hedge, and as a result, they are also the safest form of investment. If you're unsure about investing in Lucid stock at this time, or if you believe the risk associated with the EV business is too great, you should consider getting on the options train since it provides a safety net in case you run out of money and the maximum loss is restricted to the premium paid. In order to profit from options, you must still have a full understanding of the market, which is why conducting rigorous research before making any transaction is critical. Benaya Day is strategically purchasing LCID stocks till they are able to provide the vehicle to clients. The delivery date, according to Benaya, will be the date on which the stock begins an upward trend. What are your thoughts? Do you agree with Benaya? Let us know in the comments section. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.